right, you ready to go? Alright, guten Morgen, yeah. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to watch the ECB press conference. With that being said, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. So we've upgraded the system today to not show my ugly mug. You're welcome. Please click the thumbs up button. Yeah, so we'll watch the ECB press conference today. There'll be some wah, 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 and some blah, blah, blah. Do you know how to tell if a central banker is lying? Their lips are moving. Ba-dum-bum. So yeah, we'll take a listen to that. The Fed raised interest rates yesterday. We knew that. And now the market doesn't know what to make of it. The thing is, the Fed has already told us they're going to raise one more time. Well, right now, in the market, there's a big debate. What's the Fed going to do next? Well, they already told us, bro. So if you don't know, well, now you know. So whatever. So now we'll listen to ECB. How are they doing? Their future projections are nearly worthless. So we'll see if they get in the game. We'll see if they get serious. Cool. So thank you for being here. Thank you for being a subscriber. Thank you for being part of the community. Dollar strong today, only if you think there's risk off on hell. Does that smell right? No, but maybe, but no. Okay, again, there's this less of an idea of what do you think should happen versus what is happening now. You just focus on that. And technical analysis is easy, right? So anyways, this is what we'll do today. Okay, yeah, I know there's nothing on my screen. No, I know. That's a big upgrade is what I was saying, Jim. So, for example, you can go out this way. Oh, I guess I'm already there. Well, let's look at this. So this is Kiwi dollar. There's no watermark for whatever reason. But anyways, this is Kiwi dollar. And the first thing is, yes, I have a trade plan pointed down. That's fine. But tell me, what is happening now? It's made a higher high. Okay. Now, does that mean it's bullish? No, but it means you should be very, very, very cautious as a bear. But on a smaller time frame, yes, you can buy the dip. Up, down, up. Okay. So is the dollar strength that you asked for not in the moment? No. Richard says, new information. Powell said this and that and the other thing. Look, we know factually the Fed told us they would raise one more time. Maybe more. It's not debatable. Now, the only debate is, oh, yeah, well, everything's changed and now they won't do that. Okay, well, that's hearsay. All I know is the facts. That's all I know. It's the facts. Okay, so anyways, looking at this, the facts are on the hourly. This is made a higher high. So on the hourly, you want to buy a dip. On the longer term, it's still technically bearish, but that could change. What's my view on the pound Aussie? Okay. All right, let's take a look. Pound has been moving sideways and slightly bearish since May. Aussie's been bearish and neutral since May. So it looks sideways. What do you think? I don't know. Okay. Now it sounded like my internet was struggling behind me, and now it's not pulling this up. I just had tested my internet. It tested great. Now something doesn't seem quite right. Let's try something else. Well, I'm still streaming, right? But for some reason I can't even bring up a web page. Huh. Well, this is still working, so my connection here is good. Yeah, you could hear it pop in the background, right? So, am I live there? Yeah, reconnected, but something's not right. Well, I better not mess with things if we're going to do the ECB. So, Edge, one thing I would suggest, based on your question, you should consider quantbox.co. Take the $8 trial. Because asking people opinions is terrible in that case. You should start with your own solid research, and QuantBox will automate that for you. Okay, now my internet's back up, I guess. Yeah, all right, I guess we're back in the game. What was it? It was pound Aussie. Okay. It's just barely neutral. With a score of 3, 65% of institutional investors are long, and 60 or 70% are short Aussie. So this is 2 shakes of a lamb's tail from being bullish. Some seasonality shows some bullishness in the future. Right? You can see more up forces than down. typically this time of year. Cool. Thanks, JP. Let me just get the little notify me thing. Well, Richard, we're thinking further out than that. We're thinking about next year and who's going to cut first and who's going to cut fastest. So, yeah. So you can get this information under the Central Banks tab so that you don't have to guess on these things. And this is what I was saying earlier. The ECB's guidance is garbage. It's garbage. They give you very little guidance, just terrible. Okay, and based on that, they're neither here nor there. The ECB is not going to be cutting interest rates. Okay, so you can see slightly bullish. New Zealand is going to cut quite a bit. Okay, so again, all this is known. We know this. None of this is like new or surprising. Okay. Boom, ba bum, boom, ba bum, 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 bum. Okay. I think this will take a little bit of time as well, so I'm going to do it this way. This is actually in the moment neutral. Okay, but long term, you might say euro is neutral, but New Zealand dollar is weak. And so in the shorter run, we're fighting this. Okay? And we probably want to use this. So I could even adjust here. So on the daily, it's definitely bullish. And you're definitely in buy the dip mode. Your plan A can occur where we are now. So you can, in this zone, you have the right, if you so choose, to buy into that. And then plan B would be down here. So maybe on a 15-minute chart or a 5-minute chart. Okay, you look at the 5-minute, you're like, this is definitely not bullish right now. Good. Good. Bum ba dum bum 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 ba dum bum. Oh, we're about 10 minutes away now. Take a look at some commodities. Oops. Let's go check them out. We'll do some stock indices as well. I think we have 65 companies reporting today. Maybe 63. Okay, this is one last push towards the target on gold. Okay, up near 2,000. Oops, let me get this out of the way. Sorry for that. Another thing we want to look at is oil. Remember, our target was 80, and we did this 2 weeks ago. And we're still trying to plug into that. Look how close we've been. Here's 79.99. Look how close we've come to our target. Pretty amazing, huh? So that's that. Gold doing all right. Bitcoin trying to get back to 30,000. It's still technically bearish. We're at a resistance zone, if you look like in this area. And so if you so choose, if you are a bear, you could wait like on a 15-minute chart, for example, to do a lower low, lower high, lower low type trade and target below 29,000. Maybe 28,500, like maybe take it down a grand. Okay. Not doing much in the moment. S&P 500 is hit the target. It can go a little higher, actually. The total confluence is at 46. I guess we're pretty gosh darn close there, 46.20, 46.18. Be interesting to see what it does now. We talked about this, I think 2 weeks ago, where I said that I'm a bitter old man, so I would expect this to come up, and then when everybody's happy and everything's right as rain, then we get a collapse. Not that it would, but if it does, it's going to always want to make a higher high before it makes a higher low. right? And so we'll see. Like, again, I'm not predicting that, but if it happens, I think I'll understand it. So up to as high as, 46 and a half and then down. So we're at 46, maybe 46 and a half and then down. But, once again, the Fed didn't do anything to inform investors. And so they're going to continue the old narrative, even if it's wrong. Now, the market can do what the market wants to do, and the market's not wrong. Okay, that's fine. But we are on that line, the line that we talked about months ago. Oops, that's blue. Let's do this in pink. This is it. This is the first one. So this 4,600 is a big deal. And we're in topish zone now. So in here, it could do one of these things. Again, not that we know it will. It's that if it will, this is where bulls often like to take profit. That's all. It's not a buy zone. The buy zone's long gone. If you do further analysis, you'll see that we maintained above the central. So actually that higher number is the pattern. Nonetheless, we're still in the price zone for taking profit. So if you're going to be a stickler to the pattern, that is the top. But nonetheless, this is where you start thinking about taking profit. This is the weekly profit zone, okay, inside of the monthly profit zone. So we have two time frames. Swing traders and position traders are thinking about taking profit right now. Okay, that's all. You have to understand the psychology of that market. So be careful, that's all. Be careful. Let's pull up the euro and get ready for the ECB. And what I can, since my camera's not working, I can use this as the camera. Wait, I thought it was 8:30. Am I off? Yeah, I'm totally off. I think their thing was off. I think it. Yeah, yeah. I thought we just looked and it said 12 minutes. Did they change it? Maybe they had it wrong. Maybe I'm just knucklehead. Okay, well, let me still bring it up. Boom, ba-dum, boom, bum, bum, boom, ba-dum, boom. All right. So you can see it okay on the top right-hand corner, huh? Cool. Should be nice. Thank you, JP. So what do you think? Monthly pivot points important to peso traders? Yeah, that's what I think too. Well, the thing is, there hasn't been a grand exodus in the past. So definitely some profit taking, definitely some re-entry. Okay, definitely some profit taking, definitely some re-entry. Okay, definitely some profit taking, definitely some re-entry. Look at the re-entry. Like, again, if you're not familiar with how to do this, it's all taught in great detail at investorbootcamp.com. But this is a profit taking zone. And then you prepare to buy somewhere in here. I mean, in this case, sell in here. So when you're down here, you're thinking, I'll let it fade up, and then I'll either sell it this high or that high. And your target is here. So you get down there, you take profit, and then while you're down here, you're like, in the future, I want to sell somewhere around here. So you wait. You get fulfilled, comes down, hits target. So you take your profit, and you're like, somewhere in here, I want to get short again. So we're already on the August trade, I guess is what I'm saying, Ashish. You're like almost exiting. I think that's already taken place. Hmm. Okay, so the exiting has already taken place and the re-entry has already taken place. What we don't know is are there enough new bears to take it to the next level down? Okay. So that's exotics. Let's go take a look at the global stock markets. Okay. Big risk on day for the Nikkei. So if this holds, our target is way up here. If this is a risk on play, this predicts that. Okay? What do you think? Are you going to do it? That means sell yen pairs, sell yen, buy yen pairs. So that would predict up for all of these things, if there's follow through, of course. Okay, and you can see the massive move we have here. And that would put pound yen up, Swissy yen up, euro yen up, Kiwi yen up, Aussie yen up. And I'll show you, like QuantBox tells you similar data. I gotta pull you over here. If there's risk on, so again, let's do that. You're like, well, Wayne, how do I know if it's risk on or risk off? Oh, I've automated that for you. Let that load. Okay, it's looking at a lot of different things, so it's a little slow. That's right, JP. BOJ. Tonight, tonight, tonight. Oh, oh. So anyways, slightly bullish on a monthly. And it says buy Aussie, buy Euro, buy CAD, buy Kiwi, buy gold, buy the S&P 500, sell Swissies, sell yen, sell dollar. I don't know why things are so slow today. It's not the service, it's me. So let me get back into the Google Cloud. Try this again. Maybe that helped, maybe it didn't. No, it's still pretty slow. It's me. I don't know. I need a new router extension, you know? I think is what it is. I think we lost some of the bullishness that we had earlier this morning. So I think we've gone neutral. And this risk on is just slightly, there we go. Yeah, so we've lost a little bit of bullishness on the weekly time frame. On the longer term, it's updated. So a few hours ago, this was just slightly bullish, and now it's slightly less bullish. But on the longer term, it's saying these are the assets you would want to consider buying in a situation like this, and these are the ones you would consider selling. So you would consider maybe buying Aussie yen, buying Euro yen, buying CAD yen, buying Kiwi yen, as an example. And then you go to here and you look for the setup. So maybe a CAD yen, maybe an Aussie yen, maybe a Kiwi yen, maybe a Euro yen. We'll look at Euro yen just for fun because of the news. But it's not terribly bullish right now. You're still below the longer term moving average. But a bull is going to, someone determined to buy is going to trade it this way, in particular on a smaller time frame. Now, obviously, you have event risk with the ECB meeting coming up. So maybe you prefer pound, maybe you prefer Aussie. Okay? And so you could say you prefer Aussie because that's ECB. Am I going to be able to pause the ECB sound? Probably not. Hang on. Hang on, it's that window that I've popped. Okay, I can mute it by turning it off. All right. So look, if you wanted to be bullish because we have slight bullishness, you have permission to engage this trade here like this. And that's your risk on. And remember, QuantBox is watching 6 different markets in real time on 3 different time frames. So it's making 18 different calculations in real time every few minutes. Okay? And so it's saying, not economically, it's not looking at the economics between Aussie and yen in this case for risk on, risk off gauge. It's just looking at a basket of assets and seeing how they're moving based on what the market's actually doing. And so if you have been waiting to be a bull, you have permission to engage by QuantBox based on the basket of 6 different assets. Whoa. Louis says, hey man, retailers are better positioned than institutionals. I don't know if better or worse is the correct language. Retail traders make much shorter term investing decisions, and institutions make much longer term. So think of it as short term, long term. Yeah. Yeah, it's still quiet out here. Like the actual stock market in the United States isn't actually open yet. The futures are, of course, but yeah, so now that S&P 500 is way up there, it'd be interesting to see if it does roll over. But right now, like a trade like this is definitely risk on. Okay. Profit taking soon. Maybe, huh? Like I showed, we have weekly and monthly targets for S&P 500. We're in that zone now where more people are thinking about taking profit, or you're going to see an increase in VIX because today will be a large options purchasing day. And that'll show fear, or at least concern, not fear, concern that we've come too far, for the moment, not for the long term, but for the short term. Oh, I guess we got to get going. Hang on. I love you, Chrissy.
Good afternoon and welcome to our press conference. I'm joined here on stage by President Lagarde and Vice President de Guindos. My name is Wolfgang Preußel. We are also joined by journalists on WebEx. As always, if you want to ask a question, please turn on your camera and also the microphones. And with that, I'd like to hand over to President Lagarde, please.
That's a good
Thank you,
open.
Wolfgang, and good afternoon to all of you. The Vice President and I welcome you to our press conference. Inflation continues to decline, but is still expected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. The Governing Council, therefore, today decided to raise the three key ECB interest rates by 25 basis points. The rate increase today reflects our assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The developments since our last meeting support our expectation that inflation will drop further over the remainder of the year, but will stay above target for an extended period. While some measures show signs of easing, underlying inflation remains high overall. Our past rate increases continue to be transmitted forcefully. Financing conditions have tightened again and are increasingly dampening demand, which is an important factor in bringing inflation back to target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to our 2% medium-term target. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We also decided to set the remuneration of minimum reserves at 0%. This decision will preserve the effectiveness of monetary policy by maintaining the current degree of control over the monetary policy stance and ensuring the full pass-through of our interest rate decisions to money markets. At the same time, it will improve the efficiency of monetary policy by reducing the overall amount of interest that needs to be paid on reserves in order to implement the appropriate stance. The decisions taken today are set out in a press release that is available on our website.
Oh, good
The details
promo.
of the change to the
Plugged
remuneration of minimum reserves
Plug it if you got it.
are provided in a separate press release to be published at 3:45 Continental European Time. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions.
Such a great speech. I'm moved.
Looking at the
I
economic
feel like she's
activity
talking to
first.
me emotionally.
The near-term economic outlook for the euro area
That's
has
sarcasm, by the
deteriorated,
way.
owing largely to weaker domestic demand. High inflation and tighter financing conditions are dampening spending. This is weighing especially on manufacturing output, which is also being held down by weak external demand. Housing and business
Hey,
investment
mate, I bought my
are
Cuba
showing
tickets.
signs of weakness as well.
Booked the hotel. I'm going.
Services remain more resilient, especially in
The plane is full this time, though.
subsectors
Not empty.
such as tourism.
Big
But
difference.
momentum is slowing in the service sector. The economy is expected to remain weak in the short run. Over time, falling inflation, rising incomes, and improving supply conditions should support the recovery.
Well, I'm bringing shoes and
The
other
labor market
supplies.
remains robust.
So I'm
The
buying.
unemployment rate
I'm bringing
stayed at
children's
its historical
shoes,
low of 6.5% in May,
So I'm trying to contribute.
and many new jobs are being created, especially in the services sector. At the same time,
And USD.
forward-looking indicators suggest that this trend might slow down in the coming months and may turn negative for manufacturing.
No, but it's something.
As the energy crisis fades, governments should roll back the related support measures promptly and in a concerted manner. This is essential to avoid driving up medium-term inflationary pressures, which would otherwise call for a stronger monetary policy response. We welcome the recent Eurogroup statement on the euro area fiscal stance, which is consistent with this assessment. Fiscal policies should be designed to make our economy more productive and to gradually bring down high public debt. Policies to enhance the euro area's supply capacity can help reduce price pressures in the medium term while supporting the green transition, which is also being furthered by the Next Generation EU programme. The reform of the EU's economic governance framework should be concluded before the end of this year.
Well, there'll be a teenager
Let's
that
look at
is
inflation.
happier. That's a small
Inflation
contribution to the
came
world.
down further in June, reaching 5.5% after 6.1% in May. Energy prices fell again, dropping by 5.6% year-on-year. Food price inflation continued to slow but remained high at 11.6%. Inflation, excluding energy and food, edged up to 5.5% in June, with
Boom.
goods
Look
and
at that
services
618
following
hold. That's
diverging trends.
amazing. Wow.
Goods inflation decreased further to 5.5% from 5.8% in May. Conversely, services inflation rose to 5.4% from 5% in May, owing to robust spending on holidays and travel, and also reflecting upward base effects. The drivers of inflation are changing. External sources of inflation are easing. By contrast, domestic price pressures, including from rising wages and still robust profit margins, are becoming an increasingly important driver of inflation. While some measures are moving lower, underlying inflation remains high overall, including owing to the persistent impact of past energy price increases on economy-wide prices. Although most measures of longer-term inflation expectations currently stand at around 2%, some indicators remain elevated and need to be monitored closely. Turning now to our risk assessment. The outlook for economic growth and inflation remains highly uncertain. Downside risks to growth include Russia's unjustified war against Ukraine and an increase in broader geopolitical tensions, which could fragment global trade and thus weigh on the euro area economy. Growth could also be slower if the effects of monetary policy are more forceful than expected, or if the world economy weakens and thereby dampens demand for euro area exports. Conversely, growth could be higher than projected if the strong labor market,
Look at that, kick
rising
off the
real
618. It's
and
great,
receding
great.
uncertainty mean that people and business become more confident and decide to spend more. Upside risks to inflation include potential renewed upward pressures on the costs of energy and food, also related to Russia's unilateral withdrawal from the Black Sea Grain Initiative. Adverse weather conditions, in light of the unfolding climate crisis, may push up food prices by more than projected. A lasting rise in inflation expectations above our target, or higher than anticipated increases in wages or profit margins, could also drive inflation higher, including over the medium term. By contrast, weaker demand, for example, owing to a stronger transmission of monetary policy, would lead to lower price pressures, especially over the medium term. Moreover, inflation would come down faster if declining energy prices and lower food price increases were to pass through to the prices of other goods and services more quickly than currently anticipated. Let's look at the financial and monetary conditions. Our monetary policy tightening continues to be transmitted strongly to broader financing conditions. Risk-free interest rates over short to medium-term maturities have increased since our last meeting, and funding has become more expensive for banks, in part owing to the ongoing phasing out of the ECB's targeted longer-term refinancing operations known as June went smoothly, as banks were well prepared. Average lending rates for business loans and mortgages rose again in May to 4.6% and 3.6% respectively. Higher borrowing rates and the associated cuts in spending plans led to a further sharp drop in credit demand in the second quarter, as reported in our latest bank lending survey. Moreover, credit standards for loans to firms and households tightened further, as banks are becoming more concerned about the risks faced by their customers and are less willing to bear these risks. Tighter financing conditions are also making housing less affordable and less attractive as an investment.
Is it going to do it?
And demand for mortgages has dropped for the 5th quarter in a row. Against this background, the annual growth rate of lending continued to decrease in June, falling to 3% for firms and 1.7% for households, with annualized growth rates of 0%
Well, Maida, you don't have to
and
do that if you have
-0.2%
US
in the
dollars.
second quarter, respectively. Amid weak lending and the reduction in the Eurosystem balance sheet,
If you have some
annual
hard
growth
currency,
rate
US
of
dollars,
gold
Canadian
money
dollars,
fell
euro,
to
pound,
0.6% in June,
then you have a
with
chance.
an annualized growth rate of -1.1% in the second quarter. To conclude, inflation continues to
All
decline,
right, high. Look at
but
that.
is still expected to
Nice.
remain
Look
too
at
high
that.
for too
Just
long.
noise.
The Governing Council, therefore, today decided to raise the 3 key ECB interest rates by 25 basis points. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to our 2% medium-term target. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions. Thank you.
All right, here we go.
Thank you, President Lagarde. And the first question goes to Jana Rando of Bloomberg News. Jana, please.
Good afternoon, Madam President.
Good afternoon.
Two questions, as always. Does the absence of guidance for September, I assume you
Yeah, I suppose that's true,
question, mean the governing
friends
council
is
is equally open
very
to
strong
another
word.
hike, to a pause, or even to the conclusion that rates have already reached their peak? That will be the first. And the second one, I'm wondering how much of your decision on lowering the remuneration of minimum reserves has been, or how much of that was driven by concerns over central bank losses? Thank you.
Thank you very much for your two questions. You know what, let me just remind you what we have been doing. And I'll come to your interest, which is what happens next.
Yeah, get in there, Christine.
But let me just remind you what we're doing and what we have been doing. We are raising interest rates, all three rates, by 25 basis points. And this is the 9th decision to hike that has been taken in a matter of 1 year. So invariably, one meeting after the other, we have raised rates.
Yeah.
The DFR is now at 375. And this decision that was unanimously agreed amongst all members of the Governing Council is driven by one key determination, which is to bring inflation to target, our target, which is medium-term inflation. There is unanimous determination to do so. What have we decided as well? And I'll come to your minimum remuneration because that was your second question. We have also decided, and I'm going to quote because it's a sentence that you might hear over and over, not this time, next time, and future times.
Oh.
We say, our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to our 2% medium-term target.
I wish they'd give better guidance.
So some of you may have noticed a slight change of a verb. And that is not just random or irrelevant. And I think it's predicated on our determination to be data dependent. So I have said on many occasions that we had ground to cover, or we have more ground to cover.
Yeah,
what I'm saying here is that data and our assessment of data will actually tell us whether and how much ground we have to cover. So we are deliberately data dependent, and we have an open mind as to what the decisions will be in September and in subsequent meetings, because this determination based on data might vary from one month to the other. So we might hike and we might hold. And what is decided in September is not definitive. It may vary from one meeting to the other. So I hope it's very clear that we are not in the domain of forward guidance.
Yeah, no kidding.
But we are very strongly rooted in our determination to break the back of inflation and to take inflation back to 2% medium term on a sustainable basis. And to do that, we will be informed by data, we will analyze the data, and we will then decide at that point in time, we will have the inflation outlook, we will have 2 readings of inflation with all the underlying dissection and understanding of it, and we will have even more understanding of our monetary policy transmission. And that will be repeated every governing council after every governing council, so that we can make sure that, as I said, we break the back of inflation. Now, on your second question, our primary job is to set monetary policy so that inflation stabilizes at 2% over the medium term. No dispute about that. But we also have a public duty to make the implementation of our monetary policy as efficient as possible. So by cutting the remuneration on minimum reserves only, that's the basis that we will use, cutting it to zero, we will reduce the amount of interest that we pay, which means the implementation of our policy is going to be more efficient. At the same time, it is going to have no impact on our policy stance, which is currently determined by the remuneration, not on minimum reserves, on excess reserves, which, as you know, are far plentier than the minimum reserves. So that's the decision that we made. More efficiency, and that's also, of course, predicated on the principle of proportionality.
Thank you, President. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you very much for taking my question. I have a question on the discussion concerning the time lag of monetary policy decisions and the effect it will have on inflation, because you have, of course, tightened at a record pace now. And
well, right now
there
it's
are
mixed.
discussions that one first has to wait a little bit until to really see the materialization of those rate hikes. So how are discussions going on that front? And then I would like to know whether you have discussed accelerating the shrinking of your balance sheet, and if not, whether this could be a topic for the so-called second half of the year. Thank you.
Thank you very much for your two questions. I'll take the second one. We have not discussed the reduction of our balance sheets, and we have obviously acknowledged that the balance sheet has reduced, and it has reduced as a result of, number one, the reimbursement of more than what was expected to be reimbursed under the TLTRO reimbursement in June, and also by the fact that we have not only stopped net asset purchases, but we have stopped any reinvestment. So the balance sheet of the ECB is reducing as a result of that, but we have not discussed any further reduction at this point. On your other question, as you know, transmission of monetary policy is one of the three metrics that we use in order to determine our monetary policy stance, the strength of monetary policy transmission. And we look at it that way. We see it as essentially a two-leg process. The first leg is transmission to financing at large.
So for this to work, you
what
need
is the impact on
low,
lending
lower
for banks,
high,
lending
and
by
then game on.
banks to both corporates and households? And we try to
So
measure that as
eventually it
accurately as
shifts
possible by
this
looking
way.
at volumes of loans, by looking at rates, by looking at, obviously, the bank lending survey that many of you have commented yesterday, which informs us about what banks anticipate and in which area and which directions they expect to either increase or reduce the volume of loans and reassess their risks in relation to borrowers. So that's the first leg. And there are clear indications that our monetary policy is transmitted through that channel. The next one, which is the second leg, is transmission to the economy. And from financing to the economy, how quickly does that move? How efficient is it? And we are really beginning to see now transmission materializing, whether you look at investment in housing, whether you look at investment altogether, there is obviously a decline on those two accounts. Still too early, and there is certainly more in the pipeline, but we are definitely seeing monetary policy being transmitted and being transmitted strongly. That's obviously the case for the first leg, and it is also now beginning
lending
to be the
standards
case
are
in the second
definitely
one.
going up.
Thank you, President. And the next question goes to Francesco Canepa of Reuters. Francesco, please.
Good afternoon. So at the last meeting, you said that you were not even thinking about pausing. Would you repeat that today? The second question is, would you agree with a line that's been repeated by many of your colleagues on the Governing Council, that the risk of doing too little outweigh the risks of doing too much in terms of rate hikes?
Well, Mr. Canepa, you'll have to understand something, which is that I'm not repeating things if prompted. I decide to say what I want to say. Okay?
Nice!
So what I just said in
Dang,
response
she's
to the
awesome.
first question, I hope was clear, but I'm going to repeat it for you just to make sure that I'm as clear as you would expect. We are moving to a stage where we are going to be data dependent. And we will take the new projection by staff. We're going to take 2 new readings. We're going to take more information about how transmission is taking place. And on the basis of that, we will determine whether we hike or whether we pause. What I can assure you of is that we are not going to cut. That is a definite no. But on the other side,
Here she does.
could
He
be a
made
hike, could be a pause. And if it is a pause,
She's
it
passionate.
would not necessarily be for an extended period of time, because as I said, it will vary from meeting to meeting, because we continue to decide on a meeting-by-meeting basis, every time informed by the data. All right? I hope it is as clear as I can be, because we are, and that was absolutely endorsed by the Governing Council, which has validated this decision unanimously. We are determined to operate on that basis. Voila. Your second question, I've forgotten. You always ask something that I should repeat or that I should endorse, but I'm not doing that, sorry. You know, if my colleagues take this view or the other, that's fine, and they can certainly be free to expand in one way or the other, but I can assure you that on the occasion of today, it was a unanimous determination. And the determination is rooted in one very simple direction, 2%. We want to break the back of inflation. 2% is the goal, and we will get there, come what may.
Thank you. Now turning to WebEx, I'd like to give the floor to Fabrizio Goria of La Stampa. Fabrizio, please, over to you.
Thank you, Wolfgang, and thank you for Madame Lagarde for this opportunity. I have 2 questions. Actually, one is on the financial stability. Do you consider the European commercial real estate as a matter of concern? And the second one, can you elaborate more in details the spiral between wages and prices? Thank you. Thank you a lot.
What, I'm sorry, the second question, you say the spiraling?
Can you elaborate more in details the dynamics about
vicious
wages and
cycle.
prices and inflation, basically?
Okay, so the risk of
the
second round
Eurozone.
effect.
Thank you. Yeah, that's correct.
Will
Thank
you
you.
take the first one?
So good afternoon. With respect to commercial real estate,
TC, it's on the
it's
website,
quite
dude.
clear if you look at our financial stability review that we have paid a lot of attention to commercial property and to the declines in prices. This decline in prices started even before the tightening of monetary policy. And the different agents and players that are exposed to commercial property that are mainly non-banks. So it's something that we pay attention to, that we have analyzed in the past. And there is a clear, let's say, divide between commercial property and residential property. In the case of residential property, we have not seen any decline in prices. What we have seen is a slowdown in the evolution of prices. But commercial property is something that we have paid attention and that we will continue paying attention in the future.
Yeah.
And on your second question, I think you raised the question of potential risk of second round effect. Let me just take you back for a second, because it's a matter that we have reviewed, that staff is doing a lot of work on, and that we have discussed. It's the role of wage growth and the role
The
of
wage
profit
growth
margins as
spiral.
two key drivers of inflation, which are gradually eliminating the external causes that were prevalent before. The wage increases is definitely playing an increasing role as a driver of inflation. And so have profit margins. On the profit margins front, we are seeing a slight decline in the first quarter of 23. And as you may remember, our projection is also predicated on the fact that profit margins are wide enough to accommodate the squeeze that will be needed in order to allow for wage increases. But if we look at inflation expectations, if we look at how wages and profit margins are evolving, we are not seeing a second round effect result. And for the moment, at least, nothing suggests the risk of strengthening any second round effect. But we are really monitoring that very carefully because, as you know, service inflation is the sort of hard nut to crack in terms of inflation, given that on goods it's going down, energy is coming out and is negative. Clearly, we're focusing on services that are labor intensive and that are also not as sensitive to interest rates. But we're looking at that very carefully and we'll continue to look at that extremely carefully.
Thank you, Madame Lagarde. And the next question goes to Andres Stumpf of Expansion. Andres, please.
Thank you. Madam President, regarding the September meeting and the possibility of hiking or pausing, as of today, does the burden of the proof fall on an improvement of the inflation outlook, or would it be enough if the situation does not worsen? And the second question, if I may, Spanish headline inflation is now in line with the mandate, and the labor market is as hot as it has been for more than a decade. Is it something like you would like to see for the whole Eurozone, or is it necessary for the unemployment rate to go up for the ECB to stop hiking? Thank you very much.
Do you mind me asking you to
The Europeans always
repeat
dress
what
a
you said
little
about the
nicer, huh?
unemployment
Americans
rate in
wear their
Spain?
yoga pants. Hey,
No,
this is my
it's,
favorite golf shirt, eh?
At the lowest point for more than a decade.
Yeah,
And
including for young people, eh?
yeah. I was just saying that if you would like to see that for the whole Eurozone, I mean,
You're
the
like,
inflation
yeah, I came to this
going,
meeting straight
to
from the
2%
gym.
and unemployment being low, or is it just not possible and the labor market has to cool down?
I'll start with that one, your question about Spain, because it demonstrates the beauty of Europe and the heterogeneity that we have amongst the 20 countries that are members of the euro area. Obviously, the numbers that we see now for Spain, with inflation trending towards 2% and hopefully sustainably so, plus unemployment numbers that are as low as they have ever been, is a good set of numbers for the country and for the economy at large. It is not the same in all member states, and there are member states where inflation is still very high and has been high and is expected to remain high for longer. So we have to be very attentive to the aggregate number. Those are the ones that are driving our inflation outlook, that are helping us determine our policy. But we also have to look at each member state and the characteristics of each member state. We shall see. Data will actually inform us better, but the hope that we have is that inflation will come down to 2% medium term. That is our primary mandate. As you know, we don't have a dual mandate, unlike the Fed, and that's what is going to drive our determination. If we can do that with unemployment at the lowest level and staying there, that would be very, very, very good. It's funny because you ask the question of a lawyer. The issue of the burden of proof is very often a lawyer's issue. I think the burden of proof is going to be on the data, because we are determined to bring inflation back to target, but we are also going to be in the hands of data and the assessment of data. So the burden of proof is going to be on data.
Thank you. And the next question goes to Martin Arnold of the Financial Times. Martin, please.
Thank you. Madame Lagarde, two questions for you. First of all, how much do you think tighter monetary policy is contributing to the weakness in the Eurozone economy that you identified? And secondly, what would it take in terms of reduction in your growth forecast and a reduction in your inflation forecast in September for you to pause interest rate rises? Thank you.
Thank you very much, Martin. What we are working on and what staff is trying to be as detailed, specific, and conclusive about is the impact of our monetary policy on inflation. So this is really what is the focus and what is driving us. What impact our interest rate hikes have produce, and will produce on inflation. And obviously the exercise of producing the inflation outlook that will be conducted in September by ECB staff will be very informative for the Governing Council to determine how much has been transmitted and what is expected to continue to be transmitted. As I said earlier on to Annette, in the financing leg, a lot has been transmitted, a lot, we know that. In the economy at large, not as much yet. And your second question is totally hypothetical, and I understand, you know, why you would want me to answer that question. But there are so many data and so much to take on in terms of the projection that will be produced in September that I cannot answer your question in advance. We will really have to see.
Thank you. And next question goes to Jean-Philippe Lacour of Agence France-Presse, AFP. Jean-Philippe, please.
Bonjour, Madame la Présidente.
Bonjour.
Yeah, you're suggesting a possible pause in rates, je pèse mes mots, in the near future. Does that mean that during this period of possible pause, we could see an acceleration of the QT? And then it would be like a trade-off among doves and hogs at the Governing Council.
Thank you very much, Mr. Lacour.
The idea here, mate, is you want to tame inflation without killing the economy.
Our key tool, our key instrument in the
you
current
want to kill
circumstances,
cancer, but not
given
the
the level of inflation that we have at the moment, is interest rates. So there will be no trade-off between either interest rate or QT. Interest rate is the main tool and the most efficient one. So it's the one that we will be using. There is the possibility of a hike. There is the possibility of a pause. It's a decisive maybe, but don't expect me to go one way or the other. As I said, the burden of proof is going to be the data, and the ultimate point that we are determined to reach is the 2% inflation.
Thank you. Next question goes to Jan Malin of Handelsblatt. Jan, please.
Thank you. Good afternoon, Madame Lagarde. You've mentioned that several economic indicators recently have been weaker than expected, and there's some economists warning already that the ECB is overdoing it with rate hikes. So, and they think that more patience would be necessary. So what's your response on that? And my second question, climate activists criticize that green bond purchases of the ECB under the new scoring system have largely stopped. Have you perhaps promised too much in terms of what the ECB can contribute to climate protection? Thank you.
Planet protection.
So we would be doing too much and promising too much.
Yeah, let's ask a bank to save us.
Look, doing too much is certainly not something that we are considering. What we are focusing on is the inflation numbers. We are committed to deliver 2% headline medium term on a sustainable basis in a timely manner. This is our commitment. This is the drive of the Governing Council. When I look at headline numbers, when I look at core inflation number, when I look at all the many measures of underlying inflation, trying to really isolate the most robust element and removing the most
it's not the same in Europe because they don't want Germany dictating
and that
employment to Greece
to remain
Spain.
Too high for too long. So we have to do what we have to do, which is currently to hike. We know that we are getting closer, but we also know that
so if they have to raise interest rates and put Greece into recession, so be it.
Or to hold. And we also know that it will vary meeting by meeting because we want to be determined by the data and the analysis and the assessment that we make of the data. It's not surprising that it is transmitting to the financing channel. It is not surprising that there is less investment in housing. It is not surprising that there is less investment altogether. This is
why is there less investment in housing? By the way, that's a component of GDP. But why is there less investment in housing?
And this is precisely what will return inflation to target. On the other point, have we promised too much? We have promised in our strategy review and subsequent decision, we have promised to be Paris Agreement aligned. And obviously, as noticed by all of you and as noticed by Greenpeace as well, we stopped any asset purchases under the asset purchase program because we are no longer reinvesting. So as a result of that, under the CSPP, we are not reinvesting.
So notice the euro still weakening, but let me drop it into a 5-minute.
Mode. What we have decided is that we will stick to our commitment to be Paris
Get ready for a flip,
aligned. And we will, in the course of 23, elaborate the means and the ways by which we will be Paris aligned. I just want to remind you, and this is not to distract me for a second from the fight against inflation.
The Greek one.
But I just want to call your attention to the massive amount of work that is being done in the supervision arm of the ECB in order to really raise the level of awareness and the level of concern by banks and through banks by their clients. And this is really beginning to
Andrew,
work.
only if the importing countries stop making
I'd like to give the floor to
orders for future deliveries.
Tom, please.
So I don't know if that's always
Thanks so
true.
much for taking my question, Madame Lagarde. You say that the burden of proof is in the data for future decisions. What data is it that gives you more confidence that you may be able to pause? And what data would you be looking at, especially over the next months, that would stop those rate hikes? Is it core inflation? Is it more that you're looking at the downturn in the Eurozone economy and concerns about that? And my second question is
look at some of these zones we're on, huh?
The comparison with the Eurozone. The US has raised rates significantly more than the ECB for a similar core inflation rate, or even the Eurozone core inflation rate is slightly higher. The IMF, your former employer, said this week that the ECB might have more ground to cover. Do you agree? Do you think that there is a suggestion that there might be more work to do in raising rates? Thanks.
Thank you, Mr. Fairness, for you two questions. What data will be important? All data. And obviously, we will be looking at all inflation data. Starting with headline, we will have 2 readings before our next September Monetary Policy Governing Council. We will look at core inflation, but we will go deeper into underlying inflation numbers to really appreciate and understand what is moving and what is steadily, sustainably moving. We know that some indicators are showing, particularly in the in goods, it's pretty obvious. You look at producer prices, it's pretty obvious. But when you start looking into services in particular, you have to really dissect those that are energy intensive, those that are interest intensive, those that are, interest sensitive, what share of labor there is in various segments of services. So we have to look into all that to understand whether the action that we have determined in the last year and a half now is really having a long-standing impact that will take inflation back to 2%. Don't forget also that we will be looking at the inflation outlook that will be produced by the ECB, which will give us, again, the expected path of inflation, and the readings for 24 and 25 will obviously be very informative for us. We will look at labor numbers, we will look at investment numbers, we will look at just every single parameter
Have we heard
of
enough
the
from
whole
her?
economy of the euro area that
You
we
want
can
you
look
want to
at
have some
in
more
order to
fun than
inform
this?
ourselves. I know it would be helpful for those who are using the same models,
we have
that
a
are
little
playing
bit
the
of
same
fun?
exercise, to understand from us that there is one particular
Let me kill this.
specific indicator, one particular set of data that prevails over the
Hang on,
other.
I gotta
No,
pull this up
it is
over
not
there.
the case. We're looking at...
All right. You guys want to try my new AI site? I'll let you know what it is. You can go to Tradeplans.ai. This is like a beta test. It's as rough can be, but it does work. Okay. So I'll run it here. Hey, welcome to Tradeplans.ai, where you can get feedback on your trading idea in less than 3 seconds. You fill out the form, you hit submit, and our trade plans will already be in your email account. In fact, when you open it up, you will see that there's a trade plan for daily, for weekly, and monthly. And again, we can do this in less than 3 seconds. Now, how is that even possible? Well, of course, I'm utilizing artificial intelligence. So my name is Wayne McDonald. I've been trading for over 20 years, and I've been teaching artificial intelligence on how to trade. So when you submit a trade plan, we have thousands of candlestick data points in which we can analyze using dozens of algorithms and help you put together trade plans. You can take what you thought with what the artificial intelligence is thinking, and you can compare and contrast. But here's the cool thing. We also track the trade over time so that the machine is learning from your wins and your successes, or in your failures, or its wins and its failures. And the more trade plans you upload and the more trade plans others upload, the better the feedback gets. So give it a try. Fill out the form, post a trade plan, and check your email. There's already 3 different types of trade plans for you to compare and contrast with your own. Try it out. It's awesome. Try it out. It's awesome. Cool. So yeah, like it said, You can start typing in euro, and all of a sudden now there's euro stuff. Okay, dollar, see, boom, just pulls it up right away. Buy and sell, your entry, your target, your stop, post an image, you're done. By the time you hit submit, you'll already have 3 trade plans in your email account. So see what it's like. We'll put it in a history so that you'll have a history of all the trades. And you can see I posted one earlier today for Kiwi dollar, and it's tracking it, the result. We're waiting. We're tracking that trade. If you click on there, that was my trade plan. Now that's private to me. No one else will see this. Okay, now check this out. These are also trade plans that other people have posted, and I've made it anonymous. You don't know who posted this. But what I want you to do is I want you to look at this trade plan that somebody else did. Okay, they're buying pound dollar. No, sorry, they're selling pound dollar. And they put in, what is it, 1, 2, 3. They put in some bullshit prices. All right. So I'll have to come up with a rule for that. Now, I don't know why you wouldn't put in a real price, but anyways, I guess you guys are truly testing. Can you actually try, though? Like, I don't know who did that. But can you actually put in a trade plan? Cool. And so I don't like this. Oh, look, this just came in real time. I didn't even refresh the page. Did you notice this? All right, so someone wants to sell the Aussie yen at 95, target 94, stop up here. Let's take a look. They want to sell lower high, lower low. Yeah, okay, I'm good with that. So I'll like it. Did I like it? Yeah, 1 like. Cool. Oh, look at this, just rolling in. This is amazing. Notice that it's not HTML. Did you notice that? It updated without the page refreshing. It just automatically uploads. So we'll take a look. Wait, they want to buy USD yen 140, taking it up 500 pips and a bullshit stop. Okay, well, that's going to be hard for me to track, but let's take a look. Up, down. Yeah, okay, I'm okay with that. Now, for those that actually post a trade plan, you're getting 3 different trade plans created by Aiden, our artificial intelligence. So he sends you that, and that's private in your email. Okay, so anyways, I'm like that. Okay. So notice when you go back to history, 2 people agreed with me. 1 person has disagreed with me. And then we're waiting to find out if the trade works or not. Isn't that cool? Now watch this. When you're in the website, check this out. You click the plus button and you can add a new trade right here. Isn't that nice? I mean, it's gorgeous. Okay? It's gorgeous. And again, it's updating in real time. As soon as a new trade plan is posted, you can check it out. And here's the thing. This is like a stop, look, and correct session. Right? Except now you can get real-time feedback anytime you want. Yeah, look. Hey, welcome to Trade Plan. For those that are on the homepage, yeah, I wanted to make this so ridiculously quick and easy. I'm not even asking you to do a sign-up form and then do triple confirmations of all your emails and stuff like that. Like, what is it that you want? You want to get instant feedback on your trade plan. Great. Now, do I actually have you sign up? Yeah, of course I need to, obviously. But I make it so straightforward and simple that it's certainly not an unpleasant process. So fill out your trade plan, and then I'm just like, where do you want the trade plan sent? Send it to my email address. Great, done. Okay? You got a kit? Yeah, it's right here, guys. Tradeplans.ai. I'll type it in for you. Yeah. In fact, the registration process is so easy that I think you'll find it unusual. This is why a couple of people are like, it's an unusual process. Yeah, well, I'm an unusual dude. Right now, I'm spending many thousands of dollars, and it's free. So right now, yeah, give it a try. Okay, so I'll go back to now the idea of this activity feed is that you get social feedback on your trades. Okay, USD CAD buy, so they're dollar, right? 131.74, 131. Okay, so let's take a look. So they're buyers, and they want to dip and up. Yeah, from what I can see here, that makes sense. So I'm going to like it. Jim says, I like the verbose commentary on the trade plan feedback. You know what's interesting, Jim, is Aiden actually writes it. So I don't know what he wrote you. Yeah. Honestly, the trade plans and the feedback are written with artificial intelligence. Yeah. Yeah, no, you don't have to send it to me. I have seen many versions of it. But what I'm saying is it honestly is a private feedback. Maida, you sign right here. Go on the homepage, submit a form. Submit a trade plan. Hey, welcome to Tradeplans.ai, where you can get feedback on your trading idea in less than 3 seconds. You fill out the form, you hit submit, and our trade plans will already be in your email account. Yeah, so just do it. I know it's strange, right? Just fill out a form. Maybe I'll show you. No, I don't want to show you. Just do it. Yeah. Yeah, it's crazy, right? See, I really dislike what 99.9% of websites do. They're like, hey, we have something to offer you. Tell us everything about yourself, and we promise we'll do something for you. No, I'm like, no, what can we do for you? So I flip it around. I'm like, no. And so again, when you log in, you're like, I'm actually logged in here, so I can go straight to the activity page, and all new trades I'm just going to add here. So you don't have to keep going to the home page. You just add new trades there. Okay. Okay. Now, one of the main ideas of one of the next iterations is that you will be required to give feedback on trades. You can't just use it and not contribute. So my vision for this currently would be a credit system. So if you want to get feedback on another trade plan, you have to at least give feedback on 2 other people's trade plans. So you have to do what I'm doing here. So they're like, okay, buy euro dollar at 109.62. Let's take a look. 109.62, I guess is that green area, 109.62, down. That's between a pivot area and then up. Yeah, I have no problem with that. Boom. I like that. Okay. But the most amazing part of this, guys, is that you haven't even seen what the AI has generated. You have to submit a trade plan, and the AI feedback on your trade plan is emailed to you privately. It's not posted anywhere on the website. It's private. And the activity feed shows your trade plan here, but without your name on it. So once again, it's private. So the feedback you receive is private. Your post here is anonymous, but we're hoping that people give you feedback. So if you found out everybody hates your trade plan and Aiden hated your trade plan, maybe your trade plan is too early, maybe, to be. Okay, anyway, so buy 177, huh? Buy near 177 and change. See, I don't like this because I don't see a trend. So I'm going to vote down on that one. I dislike it. Let's take a look. Buy Euro Kiwi. No, sorry. Sell Euro Kiwi at 177.60. Sell it. Yeah, it's okay. Yeah, I'm okay with that. It's not awesome, but it's okay. You see how easy this is? It's an interesting way to look at the market, isn't it? It's a great thing to also look at other people's charts, isn't it? Any email will work. This is sitting on the Amazon cloud, not the Google cloud. So Gmail is not required. Otherwise, I would have asked for that. So yeah, so this site is also a live database on Amazon Web Services. So because we're doing machine learning, right? So the machine learning part is that we're actually watching this trade, and it'll learn to see what typically works in these market conditions. Did this fail or did it succeed? Once it sees hundreds of variants of similar situations, it'll start getting better at being able to interpret what works in those market conditions. Okay. So I'll let you play with it. It's real. It works. I hope you like it. I hope you use it. I've designed it in a way to avoid people to use it like an alert service. It's a way for you to get feedback. That's why you have to post a trade plan, and you only get feedback on your trade plan. And we give you feedback on 3 different time frames so that you might get a different perspective than you otherwise would. Maybe you missed something on your trade plan. Maybe you looked at only short term and you missed the bigger term trade. You know, something. I don't know. It's feedback. And I think it's really cool. Okay. So I hope it helps. Thank you for being part of the community. I appreciate you. And honestly, I hope it helps. Otherwise, I just wasted a lot of money. Peace on earth. May the pips be with you. May our profits be above average. If you're in my day trading group or swing trading group, I'll see you at 4 o'clock